Welcome back to Talk Tickers, where we make earnings calls make sense. Today, we're taking a deep dive into Snap Inc.'s Q3 2024 report. And, well, to be frank, it's a bit of a cautionary tale.
Yeah, definitely CEO Evan Spiegel and CFO Derek Anderson. Their tone was a lot more subdued than what we've seen in past calls, and this is in spite of, some positive numbers on the surface. But this digital ad market, it's a tough space right now.
Let's break those numbers down a bit for our listeners. Top-line revenue, they came in at $1.37 billion. That's a 15% year-over-year increase. Sounds good at first glance, right?
Yeah, it does, but you have to dig a little deeper. A big chunk of that growth comes from their Snapchat Plus subscription service. It's more than doubled its subscriber base to 12 million, which is impressive. But their bread and butter is advertising revenue,
right,
and that's only showing a 10% increase.
So slower growth on the advertising side, but still growth. That being said, one of the biggest things people are talking about on this call is Simple Snapchat. That's their redesigned interface. What do we make of that?
Well, early on, it looks like it's really boosting content engagement, especially among users that were less active before. And that's vital for any social media platform that wants to stay relevant. But, and this is a big but, this redesign could also shake things up when it comes to how they make money from the platform. You see, ad placements are changing, and nobody really knows yet how that will ultimately affect their bottom line.
It's almost like they're trying to walk a tightrope between keeping users happy and keeping the revenue flowing.
Exactly. It's a balancing act, for sure. And only time will tell if they've struck the right balance. Now, you asked earlier about their overall ad performance. It's kind of a mixed bag, really.
Let's break it down.
Yeah.
Where are they doing well and where are the trouble spots?
Direct response advertising, or DR as it's sometimes called, is seeing some solid growth. It's up 16% year over year. Basically, DR advertising is about getting those immediate results, like someone clicking on an ad to download an app. And it looks like their new app purchase optimization feature is really working for advertisers.
So they're doing well at getting users to take action. What about those larger brand campaigns? The ones focused on building long-term awareness?
Unfortunately, that part of their business is actually lagging behind. It's down 1% year over year. And that's not really a surprise given how weak consumer spending has been. When brands start to tighten their belts, those big, splashy campaigns are usually the first to go.
That makes sense. Now, to try and counter some of these revenue uncertainties, Snap's come out with new ad formats. They're calling them sponsor snaps and promoted places. What's the thinking behind those?
Well, they're definitely trying to add more variety to their ad offerings and boost inventory, especially with the way Simple Snapchat has changed things up. Sponsored snaps basically let brands put themselves right into user stories, and promoted places use location data to make ad targeting more effective.
So they're getting more strategic with their ad placement. Are these new formats catching on?
It's too early to say, really. They're brand new, and we need more data before we can tell how effective they'll be in the long run.
Okay. Then there's the big talk about their new AR glasses, these more advanced spectacles. The technology looks amazing, but is it something that will appeal to the masses? Or is it just a niche product for now?
Oh, the tech itself is definitely impressive. There's no doubt about that. But whether it really catches on with consumers hinges on whether Snap can build a strong developer ecosystem. They need to create a whole library of AR experiences that people actually want to use. Things like immersive games, interactive shopping experiences, stuff that goes beyond just being a novelty. Right now, it feels like more of a long game than something that's going to bring in revenue immediately.
So lots of potential, but it comes down to execution. Looking ahead now, Snap has given us Q4 revenue guidance between $1.51 billion and $1.56 billion. That means we're looking at 11% to 15% year-over-year growth.
Right. And it's worth noting that this projected growth is actually lower than what they managed in Q3, and that points to some caution. They're probably factoring in the uncertainty around how well they'll monetize Simple Snapchat and the fact that brand advertising is still pretty weak.
It sounds like expectations are being tempered. Finally, let's touch on their announcement of a $500 million share buyback program. What are they signaling to investors with a move like this?
It's interesting, share buybacks often tell us that a company believes their stock is undervalued. Basically, they're putting their money where their mouth is. And it can also be a strategic play to boost their earnings per share and maybe appease investors a little in a shaky market.
So is it a show of confidence or a defensive move? We'll have to see how it plays out.
Exactly. It's another layer of intrigue in this whole complicated Snap situation.
Well, we've covered a lot of ground here, from revenue growth and new products to advertising performance and strategic moves. It's a lot to take in, and I'm sure listeners have some questions.
Definitely. There are a lot of layers to this story, and we've only just scratched the surface. I think To really understand what's going on with Snap, you got to kind of zoom out, look at the bigger picture. We are starting to see some signs of life in the digital ad market as a whole, but it's a pretty bumpy recovery so far.
That's a good point. Some of the big tech companies, they're seeing their ad revenue bounce back. But it seems like smaller players like Snap are having a harder time. Why is that?
Well, a few reasons. First off, anytime there's economic uncertainty, advertisers get a bit skittish. They tend to flock to those platforms with the biggest audiences and the proven track records. And that obviously works in favor of those giant tech companies. Then you've got the competition, which is fiercer than ever. Platforms like TikTok are growing like crazy, and they're really appealing to that younger demographic that advertisers love.
It's hard to talk about Snap without mentioning TikTok, isn't it?
hmm
It seems like they're trying to capture some of that short-form video magic with Spotlight. But are they succeeding?
They have seen some really impressive growth in engagement with Spotlight. People are creating content, they're watching content, which is a good sign. But the real challenge is figuring out how to make money from all that engagement. And TikTok, they've set a pretty high bar there. Snap is still trying to catch up.
So they're innovating, but they're struggling to turn that innovation into consistent profits. Is this a common problem for Snap?
It does seem to be a bit of a pattern. They're great at coming up with exciting new products, but sometimes they stumble when it comes to making those products really take off and generate reliable revenue. It's almost like they're chasing the next big thing, but they haven't quite figured out the formula for turning those big things into gold.
That makes you wonder, can Snap break out of this cycle and become a real powerhouse in the digital ad world? Or are they going to stay stuck as a niche player?
That's the question, isn't it? And the answer probably depends on how well they execute their strategy over the next few quarters. They need to convince investors that they can figure out how to make Spotlight profitable, that these new ad formats are actually bringing in money, and that their DR business can keep growing, even with all the competition from companies like TikTok and Meta.
Sounds like Snap is at a crossroads. They need to prove that they're more than just a cool, innovative company. They got to show that they can be a profitable, sustainable business.
Absolutely. The good news is they have a lot to work with. They've got a big, engaged user base, a history of innovation, and a DR business that's growing. The next few quarters are going to be crucial in determining whether they can turn all of that into long-term success.
And let's not forget about the leadership factor. Evan Spiegel. He's been at the helm of Snap since the very beginning. Do you think he's the right person to guide them through these turbulent times?
Oh, Spiegel's definitely a visionary leader. There's no doubt about that. He's managed to keep Snap relevant in a social media landscape that's constantly changing. But he's also faced some criticism, for his management style and some of the decisions he's made. Only time will tell if he can adapt and make the changes that Snap needs to become profitable.
So let's step back for a second and think about where Snap fits into the broader digital media landscape. They're not on the same level as the giants like Meta or Google, but they do have a very loyal and engaged user base, especially among younger people.
That's right. They've carved out a space for themselves as a platform for visual communication and creativity. They appeal to a generation that values authenticity and connection.
But like we've been talking about, the pressure to innovate and evolve is constant. Look at what happened with TikTok. Even platforms that seem dominant can be disrupted. So what can Snap do to stay ahead of the game and stay relevant?
That's a great question. I think one area where Snap needs to really focus is augmented reality.
Their AR lenses are super popular, and those new spectacles glasses, they're a pretty bold step into the future of AR.
Exactly. They're already a leader in AR technology, and this field, it could be a game changer. If they can really capitalize on the growth of AR, that could set them apart from the competition.
But like we talked about earlier, they need to make sure they're building a strong developer community and creating AR experiences that are really compelling, not just a gimmick.
I agree completely. It can't just be about showing off cool tech. It has to be about offering valuable, engaging experiences that make people want to come back for more. Think about things like immersive gaming, interactive shopping, even practical applications like trying on clothes virtually or getting better directions.
So investing in AR, that's one way for Snap to stay relevant. What other things should they be prioritizing?
Expanding their advertising offerings is huge. They've done well with their DR business, but they need to keep coming up with new ad formats that advertisers really like. This means thinking outside the box, finding creative ways to integrate ads into the user experience without being annoying or disruptive.
And finding a way to make money from Spotlight, that's still a top priority, right?
Oh, absolutely. There's a ton of potential there. If they can figure out how to seamlessly weave ads into that short-form video experience, think sponsored challenges, branded filters, even interactive ads that let users connect with brands directly within the Spotlight content.
I'm also curious about their global expansion. They've had some pretty impressive growth in markets outside North America. Is expanding internationally a big part of their future?
It's a huge opportunity for them. There are so many potential users in those international markets. It's a vast untapped audience. They need to keep investing and making sure their products and services are tailored to the specific cultures and preferences of people in different regions.
It sounds like Snap is facing a lot of challenges, but they also have a ton of potential if they can make the right moves.
It's going to be
Yeah.
interesting to see how things unfold.
It will. It really will. This is a company with a lot of talent, a lot of ambition, and they've got a lot to prove. It remains to be seen if they can turn all of that into sustainable financial success. But it's definitely going to be a fascinating story to follow.
It makes you wonder, with all this pressure to perform, this need to constantly come up with something new, is there a risk that Snap loses sight of what made it special in the first place? It's a valid concern. There's a fine line between staying true to your roots and, keeping up with the times. It's a challenge a lot of companies face.
And that's something investors have to think about, too. Are they okay with Snap's willingness to experiment, to maybe even disrupt their own business model, just to chase growth?
It's a high-risk, high-reward kind of strategy. But look at companies like Amazon or Netflix. The ones that embrace change, that aren't afraid to take risks, those are often the ones that end up winning big.
It's a good reminder that in the tech world, playing it safe rarely gets you anywhere. You got to be bold. So where does all this leave Snap in the big picture?
Well, Snap's story isn't over yet. They're still a young company in a lot of ways, and they've shown that they can adapt and innovate. But the question is, can they turn that innovation into consistent profits?
It seems like that's the million-dollar question for Snap. Can they find that sweet spot between staying true to their creative vision and achieving the kind of financial success that Wall Street wants?
And that's the key takeaway for our listeners. Snap's at a turning point. The decisions they make in the next few quarters, they're going to have a big impact on their future. This is a company to keep your eye on.
Well, we've covered a lot today. We've looked at Snap's financials, broken down their new products and initiatives, talked about the competition, and tried to get a sense of what the future holds for them. And as always, we encourage you to do your own research and come to your own conclusions.
Thanks for joining us for this deep dive into Snap Inc.'s Q3 2024 earnings call. We'll be back soon to break down another earnings report and help you make sense of the market. Until then,